Well, g'day there, traders and friends right around the world. It is James here with you on behalf of Pivot Point Trading, bringing you this Monday afternoon market recap. Obviously, I haven't been on the airwaves for the better part of 2 weeks. The last time I did a recording, the Dow Jones Industrial Average, in fact, was trading up here just shy of 17,500. It was a Wednesday when I did record that last YouTube update. I was feeling exceptionally unwell, and people who are privy to that pro analysis class understand just what has happened to me health-wise. I am on the mend, however, I am probably sitting at about 80% health right now, and I wanted to say from the outset of this Monday afternoon market recap that I will be moving back into the routine recordings, which I do most likely a Monday, Wednesday, and also Thursday. I'll try and do 3 a week for you on this YouTube channel. If in fact the market does make some form of a noteworthy move on a Tuesday or a Friday, I will also bring that to your attention. However, I believe 3 times a week is enough, and it will cover all of the market analysis, technically speaking, which we need to stay on top of. Very quickly, I have been very unwell. I have had pneumonia, which started from a viral infection. I still have temperatures, I still have, on and off headaches, and I do have a pretty chesty cough, but I am on the mend. I am sitting at about 80% health. I didn't expect this to take 2 weeks, longer than 2 weeks to actually recover. I've been on various courses of antibiotics. However, I am very close back to full health. You can probably tell in my voice that I am sounding a lot more clearer. But I wanted to get on top of these market recaps because I haven't actually done one for a week and a half, almost 2 weeks now. It's very important that, of course, we start breaking down these markets technically and I give you a better understanding of what to expect moving forward. Obviously, the last time which I brought you that recording, we were trading up here at 17,503 on the Dow Jones Industrial Average. At the moment, we are about 1,000 points below where I did that last recording. At the moment, we are trading at 16,528. We have seen a very quick retracement or a correctional type of move. We did break below the support level, which I was expecting to hold. Ideally, I was expecting to see this market move back up to about 17,890 before we saw the correction take place. However, as soon as we broke that horizontal support level, and of course the primary trend, which has been in effect since 2009, this little red line right here on my screen, you can see the bottom just fall out of this market. Just as quickly as we sold off, we have seen at least the 2-day snapback rally take place last week on the Wednesday and Thursday. That really slowed down on the Friday. We saw that inside day doji type of candle. Today on the Dow Jones Industrial Average, we were down 114 points. The candlestick itself, however, isn't all that bearish. It really looks as though we're setting up some form of potentially a stair-step type of candlestick pattern, which does present itself, or at least expect that we will see a continuation back up or continue back up to this old support turn resistance. At the moment, the market, however, is very neutral. This 1 day's type of retracement, which we saw on Monday, isn't enough to say, look, we are expecting any form of a pullback back down to support. And again, it's not enough to say that this is a legitimate stair-step type of pattern, which is going to resolve itself to the upside. At the moment, analyzing these markets, we need to remain 100% neutral. I can very easily say that if we break below 16,250, we are going to come back down and retest 15,638, give or take a couple of points. If that does set up, then we would expect that rally to take place back up into this red box on my screen. However, just as quickly as this snapback or this correction has taken place and what has so far been quite an impressive bullish bounce, we can just as easily continue the breakout and continue the bullish advancement. If that does play out, 17,060 is my target on the Dow Jones Industrial Average. Again, I am 100% neutral. I do not have any directional positions in this market at the moment. I'm going to start placing trades either at support bullishly or either at resistance short for the next rollover and the continuation of these lower highs and of course the lower low which we have just set up. Relatively speaking, dating back to early August, we were asking ourselves the question on 2 different occasions, have we actually put in a legitimate lower low? The first time we asked this question was on this particular candlestick right here. The second time was on the mirror image of that particular candlestick a couple of days later. We were coming to the conclusion at least that yes, we have put in a relative low. This of course was before the momentous correction which we saw take place over 6 trading sessions. At the moment, we have 100% confirmed that first lower low. It doesn't matter whether you want to compare it to early August lows, early or late and early July lows, or even June lows, even dating back to January and December 2014-15, we have definitively put in that first lower low. This is very important because technically speaking, this is a lot of structural damage which has been dealt to the market. What we're looking at right now is, well, how high and how fast does this market bounce, and where do we set up that first legitimate, wait for it, lower high? If we set up a legitimate lower high, we start to see early reversal candlesticks in this red box. It's the time to be hedging. At the moment, you can take on hedges. You will be able to sleep easy at night, knowing that, of course, you do have insurance in case this market does continue to capitulate lower. However, I am looking for this market to make a move back up to relative highs, at least to make that right shoulder. It's not really defined all that clearly on the Dow Jones Industrial Average, but it definitely is on the S&P 500 if you take into consideration this little left shoulder over here, some form of a head which has taken place over about 9 to 10 months. Now we are setting up that right shoulder in this location which we are currently trading at. You can see this red box on my screen. This is the utmost, in my personal perspective, that this market is going to move higher. We do have limited upside, and of course we have limited downside, but the downside of where we are trading at being very close to all-time highs once again is definitely more rewarding, or more resourceful, at least, to the downside correction continuation type of trade trigger, which should set up over the next week, maybe as long as 4 weeks, another month higher. So pay attention to the market moves. I know today wasn't the biggest move again. We're down 114 points on the Dow Jones, down 16 points on the S&P. Pardon me, I'm about to cough. Pardon me. Down 16 points on the S&P, and on the Nasdaq we were down 51 points. Now it's a matter of looking and analyzing this market to see where we are going to see that reversal at the higher highs. That will do us on this Monday afternoon market recap. I can walk through our top 12 individual trade list, but no trades have triggered. It was really quite a non-eventful day market-wise in terms of individual moves. Instead of cherry-picking individual trade selections, instead I'd be looking for the perfect hedge, or at least a really nice location to start hedging long-term for this market if in fact we do start to see a legitimate lower high and a transitional rollover, which I believe we've been making since the end of 2014, definitely throughout 2015. This market looks as though it has topped, and we're starting to see the first waves lower. This is nothing more than a dead cat bounce and a correctional move higher, which should set up that lower high and ultimately another rollover. If you miss this capitulation over here, this is just the type of warning signal which maybe you needed to see to say, wow, this market can move quite quickly. And instead of missing out on this move, I will start to take hedge positions, understanding that my max risk on the trade shouldn't be above 17,600 on the Dow Jones Industrial Average. You can do the maths, you can do the percentage returns of what you'd be looking at in terms of risk. But of course, that reward is substantially lower, or the reward itself is much higher than the risk undertaken of the hedge. So it's quite an intelligent decision to be making, given the types of trading movements and structural movements which we are seeing across all three of the markets. That will be the Monday afternoon market recap. Again, my apologies because I haven't been on the airwaves, and definitely throughout this corrective period. The reason why is because I lost my voice. I didn't have a voice, I couldn't speak, and for about 4 days I was actually drinking or eating out of a straw. Because my tonsils and my actual throat had swelled up enough that I couldn't actually swallow all that well. I was in too much pain. And I've been more or less through the wars lately, but I am on the mend. So I just wanted to say this is the Monday afternoon market recap. If we see a substantial move on the Tuesday, whether that is bullish or bearish, I will bring you another update, but most likely, it will be a Wednesday. And we'll get into our natural and normal process, our routine recordings, which I'll do 3 times a week for everyone on this YouTube channel. All the best traders and friends right around the world. This is James signing out on behalf of Pivot Point Trading. It's good to be back on the airwaves for you, and I'm looking forward to covering this market action as it unfolds further into September 2015. All the best, traders. Goodbye.